two. Test 1 2. 1 2. Test 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 1 2. Hello, hi, I welcome you to the Good afternoon. Good afternoon, everyone. Good afternoon. Thank you for being with us today. Thank you for accepting our invite. And I'd also like to thank all those who are watching us from a live stream today. So welcome to the BOV Investor Days. This is a first for Bank of Valletta, and also I believe a first for Malta, where we have members of our executive team who will be addressing you and sharing important information about the bank, about the economy, that we are sure you will find very useful. So with us today we have our chairman, Dr. Gortina, we have our CEO, Kenneth Farrugia, our chief finance officer, and other members of the team who will be addressing you. What we'll be going over quickly is some information about the economy, which I'm sure you will find useful, some information about the bank's strategy, our finance and our position, our financial position, some opportunities for investment, and also we'll have time for a panel discussion and also to take your questions. Regarding questions, we're all very familiar with phones, since we're quite a large number and we also have a viewership from our live stream. I invite you to scan our QR code and send any questions you may have. This QR code we will show you a bit later on as well, so we will have also time. So you can send us your questions and we will definitely answer as many of them as we can in the time we have later on. So I'll just give you a couple of minutes if you want to scan right now and send us some questions you may have, and our team will be taking the questions and sending them over to me later on. So as I said, later on, I will put this up again so that you can have opportunity to send us your questions. So with that introduction, I'd now like to invite our chairperson, Dr. Gortina, to make his opening address. Thank you.
Thank you, Carl. Good afternoon. My pleasure to welcome you, the investor community, to this first ever event, and I hope not last, held by our bank in order to improve the lines of communication between the bank and its shareholders. To my mind, this is one of a chain of initiatives which the bank is taking to improve the value which our shareholders obtain through the holding of the BOV equity. And this, of course, includes our recent activities with respect to dividend resumption, payments and their sustainability, the share buyback initiatives, a number of other outreach initiatives, together with the initiative that we're taking today, which is also coinciding with the issuance of the unsecured instrument. I would like to dedicate a few minutes from my introduction to emphasize the strength of the bank, its importance, the economy, and the strength of the economy itself, which the bank enjoys a symbiotic relation. It would be very useful if the people working on the sound engineering would fix the problem that there is. So we try to make progress. My brief comments will focus on the economic context, wealth, liquidity, and returns, which is a way of understanding the value of our investment in the bank. This chart is giving us a brief synopsis of the size of the Maltese economy and its main constituents. So we're seeing that between 2019 and 2024, there has been significant growth in both the compensation of employees as well as the profits of enterprises. Now, these are the two elements which constitute the famous figure of gross domestic product, the famous GDP figure, which is often quoted. We're seeing that between the 2 years, in the 5-year period, the compensation of employees rose from a total of 6.2 billion euro to 9.7 billion euros. So that's a 3.5 billion increase, which is more than 50%. So it's quite an important growth in the incomes perceived by workers. A similar growth was also registered in the profits of enterprises, which from 7 billion in 2019 rose to 11.8 billion. So this includes the dips in COVID, the recovery thereafter, and the stabilization of economic activity right through 2004. This is a situation of economic growth which, of course, supports the bank, is conducive to the bank's performance, but it's also due to the role played by the bank in the economy itself. In terms of future outlook, we have reason to be cautiously optimistic. GDP growth will be slowing down, but still remaining relatively high, also by EU standards. Unemployment rate will be edging further to around 2.7%. Inflation will be settling around the 2% ECB target, while public finances are also going to remain sustainable with a deficit below 3% of GDP and the debt to GDP ratio stable at just over 48%. So from a shorter term cyclical perspective, the economy is encouraging indeed. What we worry about are the constraints for its medium to longer term development and growth, especially when we focus about sustainability. And in this respect, we are concerned about 4 key constraints constituting the labor force and the labor market, supply of workers, demography and the obvious implications that it is bringing about, infrastructural issues, and the protection and conservation and improvement of the environment, including climate matters. Now, there are 2 ways of looking at these, either as a problem or else as an opportunity to solve for growth in the economy to continue. At the bank, we are very much involved in looking at projects and participating in ESG initiatives to help turn these constraints into future opportunities, which will be then conducive to the growth of the bank itself. This is a chart which is trying to depict the size of the bank in relation to 2 elements. One is the size of the economy, and the other is the size of all the other banks in Malta operating together, all the other core banks in Malta taken together. The size of the economy last year was 23.1 billion euros. That is what the economy produced last year. Our customer loans last year ended up at 6.8 billion euro. Investments in treasury and similar assets at 5.8, our deposits at 12.8. So by most accounts, you will see that the total size of the balance sheet of the bank is around 2/3 the size of the Maltese economy. That gives you an indication of the strength and of the importance of the bank to the economy and vice versa. This chart is also giving us an idea of the relative strength of the bank as compared to the rest of the banking system taken together. Most striking is the fact that our equity at 1.4 billion is almost as large as the entire equity, the entire capital of all the other core domestic banks taken together. Once again, that is a sign of the strength, of the stability of BOV, which has served us well this far and which we hope and plan to continue to make it serve us over the foreseeable future. One other important aspect which the bank, which we frequently monitor for business reasons primarily, is the composition of the balance sheet of Maltese households. Now, this is of interest from the perspective of the bank for the obvious reason, because we are in the business of serving these households in terms of their financial needs. But it is also a bit of an eye-opener, possibly, on how the Maltese households, families are using their wealth and whether they are using it effectively and productively enough. Most of the wealth of Maltese households is in housing, which is the primary residences, the holiday residences, secondary residences, other investments. The value of this housing wealth in 2024 stood at 122.4 billion euros. So if you go around Malta and Gozo and count the houses which belong to households, not to businesses, and estimate their value, you will get a total amount of 122.4 billion euro. What is perhaps even more remarkable is the growth which took place over the past 5 years. We started at 66 billion euro in 2019 to almost double by 2024. Part of it is prices, is the increase in the prices of houses, and that accounts for 19 billion of the effect. But the even larger growth driver was the volume, namely the number of residences, housing units available in the country and being held by households that grew by 37.4 billion in 5 years. So this gives you an idea of the strength of housing as an investment attractor. Now you might argue that isn't this borrowed wealth? Are in there loans against these assets? Very partly so. If we have 3 billion of house loans and we say that we are perhaps 30 to 40% of the market, therefore there are 12 billion possibly house loans in the country against an asset value of 122. So really, house loans are only 10% of the value of total housing. So there is real effective net wealth invested in housing, which is substantial. Given this strong investment in an illiquid asset or in a less liquid asset, which is housing, we then tend to hold a lot of deposits as well, perhaps more than we should. 20.6 billion in deposits, up from 15.8 in 2019. Now, the holding of these deposits is not all, satisfactory by any count. These deposits are mainly liquid. They are not really productive, earning all that much. Better use could be made of these funds. Better use could be made of these monies. And one important use which could be made of these monies is through other investments, namely longer-term investments in financial assets, which would help to diversify the portfolio of Maltese households, especially when it comes to providing for their retirement income, with pensions being expected to take off in a far more important way than they did so far in the future. Therefore, this is part of our mission at the bank. We are seeing that investments in housing are healthy, but possibly they shouldn't occupy our top priority going forward. We should also give strong priority to the conversion of liquid, relatively unproductive deposits to longer-term financial capital, which can serve as a better basis for the returns to the investor as well as for the growth of the economy itself. My statements can be backed by this chart, which is showing the returns on wealth over the past 5 years on an average annual basis. Housing tended to give a net return of between 5 and 6%, depending on per annum, that is 5 to 6% per annum, depending on how it's used for residential or rental purposes. The index on the Malta Stock Exchange returned negative returns. The yields on bonds, corporate bonds, gave something around just above 5% per annum. Government bonds, of course, render less because of the more stable risk profile, whereas deposits are giving typically amounts which are pretty close to zero. This is, by comparison, what BOV yielded over the past 5 years. With the obvious difficulties of the COVID period, followed by the resolution of legacy problems, we gave returns above 20% in 2023 and 2024 on our equity, such that the holding of a BOV share over the past 5 years gave an average annual return of 11.36%. That is a very good indicator of the true cost of capital to the bank, which can be expected in financial institutions globally which compete in markets similar to ours. By comparison, of course, the bond, which is offering a different risk profile, has been pitched at a rate of 5%, which is the rate which we are continuing to offer in our forthcoming issue for the reasons of stability in the financial markets, fairness, and what we believe to be the proper pricing of capital and of risk which should be offered to the investing public. So a few final remarks to summarize the points I've made. The economy is, as we know, growing remarkably, substantial growth over the past 5 years, generally good expectations for the next few years, but of course we appreciate the longer term challenges which require attention and which the bank will also be focusing on through its strategies and products. We are therefore committed to support economic transformation, including the efforts to rebalance wealth distribution. So while housing will remain an important and growing element in the balance sheet of Maltese households, we believe that we should also be driving this initiative to shift investments away from relatively less productive shorter-term deposits into more productive capital, such as the bond that we are offering to the public at this stage. And therefore, the unsecured Euro medium-term bond program is presenting such an opportunity to invest in a stable, capital-growing instrument over the next 5 years within the institution as it itself continues its growth path with assets and stability in its capital holdings. And with that, I conclude and invite our CEO to give us more details regarding our strategic vision and our expected future placement on the market. Can you raise your hands?
Thank you. Well, good afternoon, ladies and gentlemen. And first of all, I joined the chairman to thank you for taking time to join us this afternoon for this session, the first of its kind. It's an opportunity to share with you initiatives that the bank is taking forward insofar as its strategy and its business going forward. In the chairman's introduction today, he gave a macroeconomic view of the environment that the bank is operating in, but particularly as well focusing on the distribution of wealth of the Maltese population, as reflected in the household asset survey, where there is clearly skewness towards property as well as deposits, which highlights that there is significant opportunity to redistribute that wealth allocation across other assets. What I'd like to do in this session, in my session here today, is to link the macroeconomic context to the positioning of the bank in the marketplace. And what I intend doing is taking you through the key achievements of the bank so far, but more so, what are the plans for the bank going forward. As you know, just a week ago, we announced our results for the first 9 months of the year. Good numbers, lower than last year as expected, because of the impact of the lowering of interest rates, which affected our interest income. Nonetheless, if one looks at the operating profit of the bank, which is derived out of one, our lending activities, so in commercial lending, where we finance sole traders, micro enterprises, SMEs, and equally large corporates. Our activity in home loans today account for more than half our loan book. And that's split between first loans and second loans and other loans that we provide, which are residential related. And then the third bucket would be personal lending. And this is the suite of loans that we give out to customers spread across different requirements, whether they are to buy cars or to refurbish homes and the works. The last bucket, because there are 4 streams in the interest income bucket, is the income that we generate from the management of the excess liquidity, which we do not lend out. And that has been invested very actively over the past 2 to 3 years, driving primarily the ability to cushion what we expected as the downward trajectory in interest rates. In fact, despite the significant lowering of interest rates, it went down from 4% to 2%, so a 50% cut in the ECB rate, the bank was very limitedly impacted. And the reason behind it is that we were very, very active on the shifting of liquidity into capital market instruments, where we logged in good attractive rates, which supported our interest income. So good numbers for the first 9 months of the year. Growth in our core business lines, not just lending, but also in all the other services that the bank provides, whether they are payments or cards or asset management. As you know, we're into insurance. We've just started as well non-life insurance. So the bank will be providing its customers with home insurance, contents insurance, and we've already doing that through the branches. And as from next month, we'll start providing health insurance and travel insurance as well. So we're broadening the range of products through which we service our customers. And that's what we call the net fee and commission income stream, which is the revenue that the bank derives from all the other activities that it provides to its customers through various products and service solutions. So overall, good sustained growth, and I should say stability now. We're seeing quarter on quarter the bank reporting stable results, very much within expectations. And this gives a lot of comfort to enable us to sustain the growth of the bank going forward. As well, if I shift my focus to the balance sheet, one looks at our loan book, which has continuing to grow. I should say in the home loans and personal lending, double digits. First 9 months of the year, 17% year-on-year growth, but equally in the commercial lending, high single to low double-digit growth range. So again, that shows that the bank is not only remaining an active participant in the market, but we are actually growing our market share in the domestic market, which I think augurs well for the future. And likewise, the second item on our balance sheet is deposits. The bank continues to attract significant deposits. We're opening new accounts for both existing customers and new customers every month. And again, deposits are an important source of funding because it is through deposits that we can really finance businesses and finance personal customers for their home loans or their personal loan requirements. So good value overall, and even when we look at the metrics, we look at return on equity and earnings per share, we are really well within the significant financial institutions in Europe, but we also compare ourselves domestically, and again, our numbers are in the top quartile. If we look at the results so far, we're expecting that from this year, as we have announced in our 9-monthly results, that we will be within the 215 to 250 million range for the full year, which is very much in the expectations of the bank for this financial year. And that will reflect basically growth across our core business lines of the bank, whether they are the lending suite of products or all the other products and services that the bank provides to its customers. We're giving as well visibility when it comes to shareholders on the dividend distribution, where we have formally stated the 4 principles on the basis of which we will consider dividends, and the maximum dividend payment that we pay out, which is 50% of profits after tax. Again, that gives visibility to the shareholders, the principles on the basis of which we pay out dividend distributions. We're always mindful to ensure that we allow part of that profitability beyond that which we pay in tax to the government of Malta to be added to our capital so we can sustain the growth plans of the bank going forward. Well, beyond us saying how we're faring, I think external endorsements are always very positive, and albeit the bank has performed extremely well in the domestic market, we also have it in our DNA as a bank to ensure that we give back to the community. And as you all know, we have set up last year the Bank of Valletta Foundation, which organizes a number of initiatives to address the less vulnerable members of our society that need to be supported. And the bank supports Caritas, Dar Providenza, a number of entities, to ensure that they can in turn support the less vulnerable members of our society. We support arts and culture as well. It's an important part of our heritage, and it's the responsibility of the bank to ensure that that treasure, and we have a wealth of it in this country, is protected. So, good recognition, not only locally, but equally internationally. Just a few weeks ago, we were recognized by the European Savings Banking Group for the community initiatives that we have organized by the bank in Malta over the course of 2024. And that is an international recognition of the initiatives of the bank. And we have as well been shortlisted for some awards as well, which will be announced later this month in London, insofar as our customer experience initiatives as well. So overall, good trajectory. And our financials, more importantly, have been recognized as well by Standard & Poor's and Fitch. These are international rating agencies where they have recognized the strength of the bank, the strength of its balance sheet, the strength of its results, I should say the strength of its brand, of its franchise in the country, and have given us credit rating upgrades, which is an endorsement of the trajectory of the bank going forward. Insofar as our business is concerned, our vision is to ensure that we strike a bold balance in the way that we service customers. The bank today has around about 360,000 customers. 340,000 are personal customers and around 20,000 businesses. Our personal customers come from all age brackets in a life cycle. So we have the younger generation, the middle-aged, and the aging population. And this is where, in the way that we service customers, we try to strike a bold balance. So we have the largest branch network in the country. It's nearly equivalent to all the branches of all the remaining banks in the country. And this has enabled us to continue providing pardon me, personalized service to our customers. We are investing heavily in digital. Next year, we will start onboarding both new and existing customers on the new digital banking platform, which will have a significant number of added functionalities, which will give greater ease to our customers to self-service their requirements. On the physical branches as well, we're opening twice a week in 14 branches till 7 in the evening. We're trying to extend the convenience of opening hours to our branches because we want to make sure that we are capturing the ease of access of the bank with the different circumstances of our customers. We have customers operating in different hours of the day, and we wanted to ensure that we are open to meet the expectations of our customers. This month, we will be centralizing our business centers and our corporate center into one building in Imrieħel. And we have today 5 business centers spread across Malta and Gozo, and the ones in Malta will be centralized. There will be parking facilities. And this is, again, a message to the business community that we recognize that time is precious for them, and we are centralizing our lending capabilities into one central building where they will have parking facilities. There will be a business branch as well. Again, we are tailoring and listening to our customers, right, that are telling us that we can't wait in a branch to be serviced. We have businesses to run. And so we are shifting our operations this month completely to a new building block. Our ATM network is the largest in Malta as well. We are 2/3 in. So by the end of this year, we would have serviced, we would have replaced 2/3 of our ATMs. These are a new breed of ATMs. You don't need anymore to insert the card. You can tap, insert your PIN, and withdraw money. Obviously, we encourage people to use cards and use mobiles. It reduces the cost of operations of the bank. But we know that there are customers that are digitally challenged, and we need to ensure that we provide a fleet of ATMs that will service their requirements. They say a picture says 1,000 words. I need some water, too many meetings. A picture says 1,000 words, and if you look at this slide, these are the 4 areas that the bank focuses on. So business and our customers, and we do measure. We have customer satisfaction metrics. We run around 100,000 surveys every year. We call in customers, groups of customers, to our head office in Imrieħel. We run systems with them in terms of functionality. We run products with them, so we better understand our customers. We've invested a lot in our customer resolutions unit. Today, it's completely digitalized. We make mistakes as well as a bank, and we want to ensure that we are meeting the expectations of the customers when it is due. So we have set up a dedicated team to cater for customer issues in a dynamic manner. Our internal operations, there's a lot of work on that front, particularly on re-engineering of processes. Our bank just turned 51 years old this year. So you can imagine the processes over 50 years plus. So we are reviewing these processes, re-engineering these processes, digitizing, automating where possible, to make the service journey with less friction and to deliver services in a timely manner. We are in the business of delivering value to shareholders and delivering services to our clients. But we are also in the business of managing risk. And the bank has a number of risks that it needs to manage, whether it's operational risk, treasury risk, a number of risks associated with the running of a business. And so we remain very anchored and focused in ensuring that we're managing those risks in a dynamic manner. And we are future-focused as well to understand what risks that the bank may face going forward. Last but not least, the 4th quadrant is our people. And our people actually reside at the center of these quadrants. We are a service organization. We're investing heavily in our people, in their training, in their skills. We're reskilling and upskilling where necessary because we need to ensure that the bank remains, I say, not future ready. It is very difficult to make a bold statement that an organization is future ready because the future is very dynamic and changes very, very quickly. But undoubtedly, we are a future-focused bank. And we want to ensure that we try to preempt what we think we'll face in terms of challenges and opportunities to ensure that we are well prepared to manage this. And the investment in our human resources is a key element of that. Then the surrounding areas would be digital, which cuts across all the 4 quadrants, a lot of effort and investment, particularly this year. A new mobile banking channel, new customer relationship management system, a data project, which is significant. You appreciate the data that the bank holds, the massive data that the bank holds, and we want to make good use of it to preempt your requirements in a dynamic manner, to manage decisions in an informed manner. And this is why we have this big data project, which hopefully will come to an end next year, albeit data management is something in perpetuity. It never really ends. ESG remains very core to us. We do provide a number of solutions, which are green finance, green financial solutions, green home loans, green personal loans to our customers. And we also have a suite of green investment solutions. And this is our commitment to provide customers with green choices should they wish to avail themselves of that. And last but not least, the active management of deposits and loans that we grant to our customers. What is the trajectory going forward? We are focusing on strengthening our existing core lines of business. So lending remains at the very core of the bank, and today it accounts for a significant percentage of our revenue streams, and we want to ensure that we remain very focused in giving the right products, the right solutions to our customers. But we're looking as well at new opportunities. So we've recently entered into the non-life insurance. There was a prohibition for banks to distribute non-life insurance, and we have made our representations, and today we are pleased to be extending these new suite of insurance products to our customers. A big opportunity in personal pensions. You will hear definitely more about this. I think there is an information gap about the importance of pensions. Very few people give thought to what their income will be when they retire, which will be markedly different from what they are earning today or what they may be earning up to pensionable age. And the bank has the duty, rather than the opportunity, to address that information gap, and will be organizing significant sessions, to sensitize people to the importance of, rather than pensions, being smart with their money and managing their money in a dynamic manner. There are as well a number of areas we're looking at on the security side to ensure the resilience of the bank. So cybersecurity remains very high on the agenda of the bank. We're doing quite a number of initiatives as well with our customers because of the scam attempts, which are becoming increasingly sophisticated. The onset of AI is making it difficult to distinguish between who's providing you that information and whether it is a fraudster or the person that you ordinarily communicate with. And then again, we are doing a lot on the education side to alert our customers to be on the watch for such areas. I think that summarizes, in a few minutes, I think the time does not allow us to expound in detail. We do that normally at the AGM, where we are able to deep dive into the areas, but I hope this has given you a flavor of what are the strategic priorities of the bank and what are the plans going forward. So again, thank you once again for being here, and I pass the floor to Kevin Cardona, our Chief Financial Officer, who will deep dive into the financials of the bank. Thank you once again.
Thank you. Thank you for that. I'd like to thank both our chairperson and our CEO for those very insightful slides that they showed us. As our CEO said, now our Chief Finance Officer will be going into a bit more detail into the finances, because I think we feel it's important even for you to understand some of these, because we issue statements that says the bank made X amount of profit before tax, But what does that actually mean? And what makes up a profit before tax and the other finances? And I think that's interesting information for you. And so I'd like to ask Kevin Cardona to speak to us. Thank you.
Thank you, Carl. So, good afternoon all, and thank you for being here. As Carl highlighted, I will be talking about the financials of the bank, so I won't go into much detail here. However, it's good to understand from where we are coming and where we are going. So in my presentation, I will link a lot to what the chairman and CEO stated, because obviously it's good to see how the economy is impacting the bank, and we will be taking a 5-year historical view to also link with what our chairman presented to us, but we will also look at the strategy, what the CEO presented, so the strategy, the 4 quadrants, how they are impacting our financials as well. So in my presentation, I will be focusing mainly on 4 main items, so the strength of our balance sheet, what is the composition of our balance sheet and how that is evolving over time. Also the financial performance and the asset quality, because it's good that we also focus, it's not only growth, but it's also the asset quality, so how our portfolios are faring, because that is very important also from a risk dimension. We will also look at our competitors, so our competitors both in the local market, but also looking at our European peers, because it's always good to have a benchmark against which to compare. And obviously, because we're operating in a very competitive environment, and so those are the metrics. We monitor the metrics quite actively, and it's important that we look at that as well to understand how the bank is faring in that respect. And then we look a bit also at the investor-related activities that we are undertaking as a bank and the forward-looking metrics. So, deep diving immediately in the balance sheet. So our balance sheet over the last 5 years, it grew by 24%. 16 billion, we closed in September with a balance sheet of 16 billion, which is obviously quite significant also compared to the standards of our economy. So the chairman stated before that our balance sheet is 2/3 of the economy. And this is the evolution, in fact. So over a period of 5 years, our balance sheet grew by 3.15 billion. And that is explained also when looking at our assets and liabilities. So there are 4 main areas. If one had to look at our balance sheet, there are 4 main line items, which are our deposits on the liability side, which are complemented by our capital. So that is fundamental for us in terms of liquidity and capital. However, in terms of the assets, then we have the loan book. So the loan book today constitutes a significant amount of our assets, and what we don't lend is invested in our investment portfolio. So those are the key components if one had to look at our balance sheet, both on the liabilities and capital side, but also on the assets. Deep diving a bit on our deposits, because ultimately this is fundamental for the bank's operations. Our deposits today, they have grown significantly. So 13.3 billion as at end of September. However, it's the evolution which is important. So over a period of 5 years, we've seen that our deposits grew by 2.1 billion, which is 19%. So, and that continues to grow. So quarter on quarter, we're seeing significant improvements in terms of our deposits. And the important part is also the composition. So the composition is that our retail deposits, our personal deposits continue to grow. And that is important for us because they are the less volatile type of deposits. So the retail deposits, and in fact, also the CEO mentioned that during the last 9 months, the deposits grew by nearly 577 million, which is a good amount also when compared to previous quarters. Looking at our loan book, the loan book is obviously our main source of income, so our NII, so our loan book is very important for us. If one had to look at our loan book, there was a significant growth of more than 60% over a period of 5 years, so 2.9 billion, which is obviously going to support our businesses, but also support our retail customers. So our loan book is made up of three main areas. So practically we have our business loans, which are our commercials. So over a period, so over the last 9 months, the business loans grew by nearly 9%. Our home loans grew by 13.3%, and our personal loans grew by 12%. Obviously, we're getting used to these numbers now, double digits. In the past, they used to be in the region of 5%, but it shows also the commitment and great drive that we have from our business people. So be it the commercial area and be it the retail area, where they are working very hard to achieve these numbers. And I believe that is what we are seeing also in terms of interest income. So very strong interest income, as we will see in the following slides. However, equally important is our treasury operations. So what we don't lend, we invest. We are investing. So I believe this captures the essence of our financial strategy over the last 2 to 3 years. So what this is saying practically is that we have shifted a significant amount of cash. So our cash reserves from 2021 to 2025 went down from 5 billion to 1 billion, but that was a targeted strategy. So the strategy was to convert from short-term assets into long-term investments into our bonds, and in fact our investment portfolio grew by 3.6 billion over a period of 5 years, which is 110%. I'm saying that this is important also to understand the context in terms of our net interest income. So the graph on the right, it shows the evolution that we had in terms of volatility of our income. So over a period of 4 years, a 1% shift in interest rates of the ECB meant that we have reduced the volatility. So in 2021, 1% would have meant a hit of 52 million, and now it means a hit of 16 million. It's a bit technical, but it's important to understand, because ultimately, when one looks at our results, we had very stable results in the first 9 months. And the reason is because of this. So the CEO mentioned that over the last 9 months, we had a reduction in the rates. The ECB rates went down from 4% to 2%, but despite that, our net interest income remained very stable, as we will see in 2 slides that are coming. However, before going to that, it's also the capital, which is very important. Our equity it's extremely important. So we have 2 main raw materials, if I can call them like that. So it is our liquidity, our deposits that we have, which are strong. However, equally important is our capital. So our capital is important so that we can continue lend. And if one had to look at this slide, we are seeing that our capital continues to grow. So our capital grows mainly in 2 ways. We plow back some of the profits that we have during the year, and that goes to our Tier 1 capital, we call it. But we also have capital in the forms of bonds, and the bond that we have just launched, which will open tomorrow, the Tier 2 bond, it goes to strengthen our total capital ratios and our MREL so that we can continue growing. Because ultimately, the bank is here for the long term. We look for the future, we forecast the future, and as much as possible, we preempt what our future needs will be, and so that we will have enough capital to continue sustaining that. And this is exactly how we are distributing our profits. So our profits, if one had to take H1 of this year, we had a significant portion which we distributed back to our shareholders. So as you know, we had record dividends paid out in the interim, so that was 35.7 million. However, apart from the dividends, we retained a significant amount, 51% of that, into our retained earnings. And that is required for us to continue growing in the future. Apart from that, however, you will recall that during the AGM we had announced, and in fact there was the resolution which was approved, that we will be retaining some of the H1 profits also for a share buyback reserve. So the bank allocated 7.8 million for the share buyback reserve. And as you know, we started the share buyback in August. So in August, we have launched the initiative. My colleague after me will give you some indication also of the numbers that we have achieved. However, that is going well as well. And the main objective is obviously to increase the liquidity of the BOV shares. It's not, we will not be cancelling the shares, but we will be using this tool to increase the liquidity of the BOV shares on the Malta Stock Exchange. Moving on, because I'm quite conscious of time. So this is a slide which captures the main performance of the bank over a period of 5 years. So it's the stability that was also mentioned by our CEO, the stability that we have achieved also during the last 3 years, both in terms of profitability, but especially in terms of our income. So both the NII, which is now stable at levels of around 400 million per year, but also our net fee and commission income. So our net fee and commission continues to grow. Obviously, these are the 9-month results. So these are the 9-month results which we have announced last week. This is the composition of our income, so how our income is split. Our income is mainly made up of net interest income, so the interest that we make both from our loan book and also from the treasury portfolio, and also the net fee and commission, which accounts for 17%. Moving on, because in the beginning I mentioned that it's not only the growth, which is important for us, equally important is the asset quality of our portfolios. So both the credit portfolio and the treasury portfolio. The treasury portfolio, so the 6.7 billion that we have, and it's all invested in very high quality instruments, so practically all investment grade and mainly AA's and also AAA instruments that we have in our portfolio. However, even the credit portfolio has been doing very well. In fact, this chart, we like it. It's the only chart which we like that is going down. So practically, it's the NPEs, the non-performing exposures, which are the facilities which would not be performing well. So that went down from 4.72% in 2020 to a level of 1.92 as at end of September. So end of September, so these are levels probably which we have never experienced in the past, and now the percentage which went down below the 2% is very much in line with our European counterparts, and we will see that also in subsequent slides. However, even it's not only the NPE, also when we look at our asset quality, the underperforming loans, they have been improving year on year, as one can see in the graph on the right. However, even our coverage ratio. So our coverage ratio is how much allowances we have against our non-performing loans, which today is 60.7. I'm mentioning these numbers. I don't want to bore you. However, this shows the strength of our books and how they have been, the evolution over the last 5 years. In terms of market positioning, so comparing to the whole market and comparing to our peers, both on the liability side, so our deposits are in the region, have been in the region of 49 to 50%. So out of the total deposits, and it was also mentioned in one of the slides of the chairman, we hold 50% of the total deposits that there are in the market. However, even on the loan book. So on the loan book for personal loans and commercial loans, we hold more than 50% and growing, but even the home loans. So the home loans, it is where we have seen significant growth over the last 2 years. We've seen the double-digit growth. However, even from a market share perspective, so we increased 2.7% over a period of 2 years, which is significant when one looks at the home loan portfolio in the total economy. This is important because apart from benchmarking with local banks, it's also good that we benchmark ourselves to the SIFIs. So the SIFIs would be the SSM banks within the EU, the big banks, the big guys. We like to compare ourselves with them as well. So if one had to look at our return on average equity, the profitability, we're higher. So as at end June, we had an ROAE post-tax, and that is why this is post-tax, of 12.3% compared to the 10% of the SIFI banks. The CET1, so our capital is stronger than the SIFI banks. Our cost-to-income ratio, so this is good that it is below. So we have a 48%. So this is how much we are spending compared to our income, compared to the 54 of the SIFI banks. And the loan to deposits. So the loan to deposits is how much we are lending to our depositors. Be it low at 57% is good, but because it shows that we have potential to continue growing. And that is obviously what we are aiming for, and that is why we are issuing also more capital. This is a graphical and colorful representation if one had to compare also to our local peers. The more green you are, the better. So we are on the left. So everything is green. Obviously, here we are mentioning our balance sheet size. So our balance sheet size is nearly 16 billion. So this is June. That is why it's still 15.9 billion, but we're more than double our second competitor on the market. However, even if one had to look at the capital base, we're very much above, and also our returns and capital ratios. Moving on to the investor-related, so these are some key ratios which the shareholders and other investors look at. So our net asset value, how much the value on our balance sheet continues to grow. So this is the NAV per share. It continues to grow year on year. However, even when we look at the market, so the market cap is essentially how much the market values the bank. So in 2022, the market used to value the bank 472 million, and now it went up to 1.2 billion. So one can see the evolution of the market cap, so how much we are valued, and this is reflective also of the share price. So as you know, the share price increased quite materially since 2022, and that is reflected in our market cap. Dividend policy, it's important. So for our investors, obviously, dividends are important. The CEO mentioned the 4 pillars. So very quickly, the 4 pillars, because we need to ensure that we do distribute, and the bank, in fact, has the forward-looking statements that it issues. However, apart from distributing, we need to ensure, protect also all our stakeholders to ensure that we continue growing in the future. So our main pillars in terms of dividend distribution would be that the dividends need to be affordable. We need to retain enough capital to meet the regulatory requirements. We need to retain enough capital to meet the strategic objectives, but also we look at the shareholder expectations. And this is essentially how we are operating our dividend policy and distribution policy at the bank. This is obviously the graph over a period of 10 years. As you may know, over the last 2 years, we have distributed record amount of dividends. So our dividend payout ratio was in the region of nearly 40%, which is obviously compared to the last year's a high amount. So, closing off with some forward-looking metrics. So, over the last quarters, we were issuing guidance to the market. So, in terms of profitability, for the full year, we are seeing that our profits will be in the region of between 215 million to 250 million, with a maximum payout distribution of 50%. Obviously, this is dependent on the prevailing market conditions. However, when we announced Q3, the bank was comfortable issuing the company announcement with these forward-looking expectations. My last points, obviously, in terms of sustained profitability, we are seeing that the ROA will be above 15% for the end of the year. In terms of capital optimization, I've mentioned the new EMTN program that we will be issuing of 3 to 5 million, which opens tomorrow. So the applications will open tomorrow for this bond product. And obviously, the strategic growth priorities, the CEO mentioned quite in detail, so I won't go into the detail of that. However, through this presentation, I tried to summarize what the bank is doing and what it aims to do for the near future with respect to the financial dimension. And with that, I pass on to Carl. Thank you.
Thank you. Thank you for that. I think our next part will deal with a bit more specifically into the bond issuance that we have planned. We have Jean-Carl Grech here, our head of capital issuance and optimization, who will be going through just a couple of slides, not a lot, and then we can move on to the final part of the session. But I think this is a very important and very useful part of the session, which we will be presenting to you. So I ask Jean-Carl to come up on stage. Thank you.
Good evening. Through this very short presentation, we're going to be running you through the EMTN program that my colleagues have alluded to this evening, and also explaining to you why the bank feels the need to issue such a program, and also the subsequent bond issues. Bank of Valletta is not a new player in the market, especially when it comes to investments. Apart from its equity position in the market, in the local stock exchange, the bank has an excess of 400 million worth of bonds, and it is also a player in the international market with a 350 market placement in Ireland. So why does Bank of Valletta need to raise additional capital? Primarily, it is because of the growth of the bank. The bank has been growing with regards to balance sheet size, predominantly when it comes to lending, now reaching just short of 8 billion in advances, and that has an impact on its risk-weighted assets. We have seen risk-weighted assets increasing. But apart from that, there's also the regulatory element as well. Part of it is the introduction of CRR3, which has also had an impact on risk-weighted assets, seeing a relatively increase in risk-weighted assets from December up until January of this year. Another reason is the efficient use of capital, given that the bank has different tiers of capital, Tier 1 and Tier 2. Part of the work that the bank is doing is wanting to ensure that it is optimizing its capital mix, so making sure that Tier 1 is not being used for Tier 2 purposes. What is an EMTN program? An EMTN program, in short, is a legal document that serves as a basis for the bank to issue bond products on the market. In this regard, it will serve for the 12 months coming, whereby the bank plans to issue up to 325 million worth of bonds. The main benefit of this is that it serves as the bed each and every time that the bank needs to go for a new bond issue during the course of the next 12 months, it will introduce a final terms document for each particular issue. The base prospectus and final terms have also been approved by the regulatory authorities, by MFSA, in the past weeks. The first tranche of the bond is for an amount of 100 million, which can go up to 125 million if the bank sees the need. The bond offer price is for 100 euros, carrying a coupon rate of 5%. Maturity term is for up to 10 years. But there is an early redemption clause in such a bond that the bank might redeem it anytime between year 5 and year 10. The bond structure, in order for it to be MREL eligible, there are certain clauses. Part of these clauses are subordination, meaning that with regards to creditor hierarchy, this particular bond ranks lower than depositors. So first, depositors would be paid, and then the bondholders in the effect of a resolution process. If this also kicks in, this product also has bail-inable clauses, and it might be converted into equity or shares, with an option also to be written down if the resolution authorities so deem fit. The allocation for this particular bond issue is split predominantly in three, with preference being given to preference shareholders, 50% of this, totaling 50 million. The second category refers to institutional investors, having 25% allotted to them, and then additional 25% has been directed towards the general public. Both the general public and the preferential shareholders have a minimum subscription amount of 10,000 per application, whilst the institutions have 100,000 minimum amount. The overall allotment will be allocated based on the bank's discretion. As my colleagues have also highlighted, the bank during the past years has introduced various initiatives targeted towards investors. These particular three are targeted towards equity investors, predominantly a bonus issue, continuous dividend distribution throughout the years, and also a forward-looking view of this distribution. Thereafter, a share buyback program, which has commenced in operation earlier this year in August, and we have seen that up until 17th of October of this year, 11% of the total volumes that have been traded in Bank of Valletta have been purchased through the share buyback program. As at date, volume traded on the stock exchange in total for BOV shares has surpassed 18 million. The share buyback activity here with the different dates, whereby the darker pillars depict the trading activity that the bank did in this share buyback program. Apart from this, for those investors that prefer, of course, a stable fixed income, the bond issue that we have made reference to might be an option for them, and we therefore encourage you to reach out to your preferred financial advisors, some of which are present with us here this evening, to have further information. With that, I thank you for your time and attention.
Thank you, Jean-Carl. Now we'll move on to the last part of our session, where we'll be taking your questions and answering them to the best of our ability. So I will ask our CEO and CFO to join me up again on stage, and I'll invite also two other members of the executive team, our Group Chief Compliance Officer, Natalie Grech, and our Chief Personnel and Rent Officer, Simon Azzopardi, to join us for some questions. We have the QR code again on screen, so keep sending us some of your questions. I already have some that came in during the other sessions, so I'm already well set up for these questions. So I'm going to start picking some at random and asking our panel. So perhaps this I could ask to Simon Azzopardi. So how will the service you give us through your branches and offices going to change? I'm imagining this is implying how do we service customers, through our retail network, and how will this develop over time, if I take this correctly?
Thank you, Carl, and thank you all for joining us today. An interesting question that we are seeing happening as we speak. As was highlighted by the CEO, we are now in the second year of a 3-year strategic plan that is seeing a quiet transformation in the way we deliver our service. And here I want to highlight the need that we see a seamless transition through all our channels, be it the physical channels, which include the branches and the investment centers, and also our digital channels when it comes to the mobile app and the internet banking. What are we looking forward towards for the next year? So the progress that we are making is that, and the goal that we are seeking is that the client gets the best of service, and this is strongly being pursued by the constant feedback we are seeing and we are asking for the clients, both negative and positive feedback. And I highlight the feedbacks because, as the CEO mentioned in his intervention, we also need to learn from the mistakes that we make. So it is important that we give equal importance to both types of feedback, and we reflect this in the service. What are we doing towards this area? And here we have implemented a number of changes across the board. For example, if you look at where we are operating now, we are operating a combined operation of 2 branches split up in 4 regions, which gives us greater focus on the regions that we are operating. Here I would also highlight the challenges that we are facing, where we are running a branch network that is greater than the combined networks run by other banks together. So here the challenge is that we've seen a number of banks withdrawing their physical presence because obviously it's very costing, and there are challenges with respect to deployment of staff, which is, when it comes to human resources, a very rare resource today. It's becoming increasingly rare, even so much so because the nature of the service that we give, we cannot tap into foreign workers that are assisting the growth of our economy. We've tried this physically in a couple of branches, and the feedback we receive from the clients is that the clients want a Maltese-speaking, or at least a person that is accustomed to our culture, to service them face-to-face. I'm highlighting this because it's a challenge, and we are doing our best to meet this challenge throughout the 30-odd branches. I'm saying 30 because from time to time we are closing branches to upgrade as I speak, and this is again another important dimension in providing customers with a better service and a better environment. So we are upgrading constantly, and again here I thank the input from the team, from our Chief Operating Officer, which we integrate greatly to deliver. And you are seeing now branches that are being tailored in line with the respective area that we are servicing. Very soon you will see new additions also in the branches when it comes to servicing clients. For example, the market is not producing, and it's not an area where there are a lot of willing people to become cashiers. So we need to amend and adapt ourselves to this. We are very much aware that some of our customers are not digitally enabled, so they may have some difficulty in using a card either to pay directly or to withdraw cash. And we are seeing that we will support this through use of QR codes, etc., where it will be simpler for our less digitally enabled customers. Shifting to the digital element, here next year you will see a material leap with respect to the services that we will be offering. As we speak today, there are a number of bank employees that are already using the new beta version that we have of the mobile and internet banking, which I'm pleased to say it's giving us very, very encouraging results. And we are also aiming to improve on these results to launch with our customers next year. Here there will be, the main concept is to enable the customer. So just to give one example, whereas today to change a limit or to advise us that you're going abroad, you need to call and have a human intervention, this will be available for you at your fingertips to execute there and then as needed. I would like to highlight that, as was mentioned initially by the previous speakers, we are today servicing more than 360 customers throughout the whole network. And when I say network, it is not just the physical network. Just to give you an idea, around 220,000 of these customers use our digital services. So this is how important our digital services have become. I would like also to highlight that this is applied within the context, so our strategy with respect to delivering the service. We also need to understand that we are here to meet the needs of a number of stakeholders, which also include shareholders, which again, here we will have conflicting needs with the customers and with shareholders, which at times they are one and the same person. So we also need to look at profitable operations. And this is why we are heavily investing in new ATMs. This year, by the close of the year, we would have changed 1/3 of our ATM fleet, which again is the largest fleet if you combine all the banks together and their ATMs. We are running 90-odd ATMs across the island. This year, and I'm fingers crossed because we have one final branch, because of the fact that we had to reduce the human intervention in the dispensing of cash, we have also introduced in every branch, in some of the branches, 2 ATMs. This year we will close the loop. We still have one branch in Gozo where we are having difficulties with the logistics because of planning permits where we don't have an ATM in that particular village, and we'll be able to provide this as well. And I'm also pleased to highlight that by the end of the next year, the larger part of our ATM fleet will be all new. This will give greater facility, for example, even on things that today maybe, today we ask you to update your KYC by sending us a copy or going to the branch of the ID card. By next year, that you can go to an ATM and just do at the ATM and move on. With respect to the stakeholders, and I will close here because I'm sure there are other questions that we need to answer to. Obviously, we have in mind, yes, the needs of the shareholders and their need for profitability, dividend, and growth of the company, the needs of the client, the needs of the employees, which are our key resource. Banking is based on a service, so we are as good as our people. And here we are investing substantial. If you look at the costs other than capital investments, there is strong investment in our HR and our human resources, be it through wages, be it through training, very intensive training, both locally and overseas, and also benefits that, for example, include pension schemes where we are contributing heavily to the future of our staff. Last but not least, clients and our social dimension. Bank of Valletta across the years has always been regarded as the local bank. We are proud to fill that role, notwithstanding again challenges that I have mentioned at the beginning of our intervention, and we continue to strive to fulfill that role as best as possible. And this is why we are heavily assessing also our footprint across the island to be able to reach as much as possible the whole population across the board. And when I say the whole population, not just the local population. Today we are a community of multicultures and multi-nationalities. which I proudly say we are servicing probably the only bank that is really servicing the Maltese community in its entirety.
Thank you, Simon. I think the next question is most probably directed to our CEO, because I know you mentioned it in your presentation, and it's related to insurance. You mentioned that we're offering insurance. Why is the bank offering insurance? And I'm saying, I'm imagining this question is, what is of interest to us in the sphere of general insurance?
I mean, if you look at the product catalog of the bank, basically it addresses two areas. So it addresses the financing requirements of our customers, be they personal customers or business customers, and there we have a suite of solutions through which we provide financing to our customers. We have also broadened that to, as I said earlier, to include green solutions, because we want to support our customers in this green transitioning of our economy. And I'm pleased to say that today in this financing bucket, 15% of our loans are green. So increasingly we are seeing customers either buying electric cars, apertures, which are energy efficient, cladding of buildings, companies that part of their capex for projects is green because they get benefits and reduced interest rates in doing so, green home loans. So we're increasingly seeing people gravitate to green. This is a journey, and we need to ensure as a bank that in the financing side we have the required solutions. Then when it comes to the other services, we address the financial management requirements of our customers. So we provide a suite of bank assurance, life assurance products. We're into asset management business. We're as well into the brokerage side of the business. So we as well provide a suite of services. What was missing in this suite of services was insurance products. I mean, as customers, they have insurance requirements, whether they are insuring their home or the contents of their home, whether they require travel insurance, albeit we have as well cards that provide insurance products as well, but also where we have a very low penetration of health insurance. I think, again, this is very much like pensions. We need to educate the market on the importance of health insurance, and particularly when you have acute illnesses that require certain treatment, and this is where health insurance becomes very handy where you have it. And again, this is the role of the bank to try as much as possible to provide its customers with those solutions, whether they are investment, insurance, financing solutions that meets their requirements. And clearly the bank is a large player in the market, and it has a role to play in providing these solutions over the counter or, as Simon said, through its digital channels.
Thank you. There are a couple of questions which I can group into technology and AI. AI is artificial intelligence and the way, I guess, the bank would be using or is using such technology and AI. Perhaps you have some views on that.
Yes, I mean, artificial intelligence is the new in thing, and we're hearing a lot about it. It's being used to drive better customer experience, better personalization, and better security, I should say. But it is also, like everything in life, being used wrongly. And we're seeing these deep fakes, these scams, some of them with artificial intelligence embedded with them, which are dynamic, really and truly, and can dupe customers to commit to fraudulent transactions. I think if I take a look back, and I've been with this institution for 40 years now, I remember the introduction of telephone banking. Probably the younger generation of today do not even remember that they had to lift the phone, dial the numbers to get the balance through a code on the phone. This clearly would not apply and is not relevant to the customers of today. And then we went into internet and mobile banking, the new in thing. And we seem to forget how we used to do banking at that time and what digital banking brought about. Greater efficiency, 24/7 services if you want to process transactions, if you want to pay bills, if you want to transfer money, right? So when we did not have that technology, we used to have to go physically to a branch. So technology is bringing convenience, and this is what artificial intelligence will bring about. It's an enabler of efficiency. It today has to be embedded strategically, and this will form an integral part. We're already using artificial intelligence in transaction monitoring at the bank, and it can, with a degree of speed, identify patterns, but it can be used as well for hyper-personalization insofar as preempting the needs of customers. So I see a lot of scope for the bank to embed AI. We already have given licenses to all our staff to utilize AI because it will definitely improve on productivity and efficiency. So I'm very hopeful, and we have signed an agreement with Microsoft earlier this year that will be supporting the bank in its ambitions to embed AI within its organization.
Thank you. Perhaps it's a good point to bring in our Group Chief Compliance Officer, particularly in this, because if we mention AI, technology, we've mentioned scams, cybersecurity, and also all the things you mentioned in strategy. Simon mentioned a lot of initiatives around the branch. There's an element of managing also risk, and what we call in our speak, governance and good governance. How does, from your viewpoint now, the bank introduce or use or place good governance within all our operations to make sure that the bank is secure, also within these new challenges, as you're saying, of today?
Thank you, Carl. So I'm sure that everyone is aware that Banca Valletta is licensed by the Malta Financial Services Authority, but perhaps not everyone is aware that the bank is supervised by 6 different regulators. You have seen in the previous slides that the bank is systematically important and a main contributor to the economy of the country. And because of this, because of its size, Banca Valletta is primarily supervised by the European Central Bank, which together with the Malta Financial Services Authority, through a joint supervisory team, supervise the bank very actively on an ongoing basis. However, apart from those 2 regulators, the bank is also supervised by the Central Bank of Malta when it comes to matters relating to payments. It is also supervised by the FIU on matters relating to anti-money laundering and funding of terrorism and sanctions. We are also supervised by the Single Resolution Board, which is a European authority responsible for the resolution of banks when this happens, and it is the authority that takes over from other banks in the event of a resolution. There is also the Information and Data Protection Commissioner, which is the local commissioner for data protection, which is responsible to supervise not just banks, but all entities subject to data protection laws on data protection matters, on matters relating to personal data that the bank holds on its clients, but also on its employees. And I would say that the common objective of these different regulators is to ensure that the bank is stable today, but remains stable in future. And their objective and their supervision, and I can say that when it comes to the European Central Bank, the MFSA and also the FIU are very active in communicating with the bank and requesting information, in analyzing information that the bank provides, are very active in their on-site supervision. So they come to our offices, look at processes, look at systems to get a first-hand understanding of the controls that the bank has in place. And the objective, I repeat, is to ensure that the bank is very strong today, but remains strong in future when there are challenges in the international markets or geopolitical challenges. But these regulators also introduce regulations, a lot of regulations, directives, banking rules, rule books that the bank must implement and follow at all times to ensure that it is operating in line with its regulatory expectations. And the bank has a team of experts on different topics of regulation to ensure that the bank is fully conversant with these requirements. It understands the extent of their implications on the bank and ensures that the bank is well prepared to implement these necessary changes to operate in line with these requirements. The objective here is to ensure that the objective of regulation is to ensure that the bank operates in line with its obligations in a prudent manner and in the best interests of its clients, its investors, and its stakeholders and shareholders in general. The bank is very active in implementing these different regulations. As you know, the bank is a universal bank. It provides a lot of services and products to our customers, and therefore is impacted quite heavily by these different regulations, which some of them are very prescriptive and very complex, very complex to understand and implement. And we strive to implement these complex, prescriptive, and onerous requirements in a smart manner as much as possible, and in a manner that enables the bank to be compliant with these different requirements at all times, but also ensuring that they do not create unnecessary burdens, unnecessary requirements, or additional unnecessary processes when it comes to the bank and its provisioning of its service and the products to customers. So I would say that in summary, regulators are very active in ensuring that the bank is stable today and remains stable in difficult times. They introduce regulations to ensure that the bank operates within specific guardrails in the best interest of our clients and investors. And the bank is very active and very much committed to implement these requirements in a very smart manner to ensure that they provide very efficient and very effective service execution to our customers.
Thank you. I think that gives us also a bit of peace of mind as well. There's a nice peace of mind of how we operate.
Yes, in fact, we have just mentioned AI. For example, AI is very heavily regulated, so the bank is obliged to follow the requirements of the AI Act to ensure that any activities, any systems, any services that have AI components or are enabled through AI capabilities, they operate within acceptable parameters, here again to ensure that our clients are fully protected at all times, even where there are the AI capabilities delivering part of these services to our clients.
Very good. Thank you. This came in from a shareholder, but I imagine that the shareholder is also representing a number of shareholders. So this person said that this year you did a number of things for us shareholders, which I am imagining refer to the dividend, the bonus share issue, even the buyback that you mentioned earlier. Are you planning for more?
Crystal ball gazing. No, undoubtedly we have communicated the key principles on the basis of which we will give consideration to the distribution of dividends going forward. So the considerations which were shared by my colleague Kevin revolves around affordability, looking at the growth of the bank, regulatory expectations and shareholder expectations, and taking that into consideration, then there is a consideration of how much of the profitability of the bank will distribute to shareholders, how much will be retained as part of the capital to support the growth ambitions of the bank, and how much we allocate to share buyback to provide for liquidity. Now, obviously, the performance of the bank, and albeit we do projections, these are based on, one, the broader economic projections for the country. And if I were to hone on that, because that is a very important consideration, if you look at the European Commission forecasts for the country, together with those for the Central Bank of Malta, about what they expect the economy to be performing around, it is stable in the 3.5% to 4% region for the next 3 to 5 years. So one expects that, not giving consideration to curveballs, as I call them, unexpected consequences, geopolitical tensions, we expect a stable economy, stabling down to 3.5% to 4%. And that visibility is very important for the country, and it's very important for financial institutions like us that operate within the domestic market. As a bank, we are very focused on, one, strengthening our core areas of business, and we've been showing that over the years. So we've been strengthening our market share in the core areas which are contributing to our profits. And if the past is anything to go by, the quarterly results we've been announcing, I describe them with one word: no surprises. Right? Because the profitability of the bank is becoming more and more predictable, right, in terms of performance. Of course, as a bank, we're looking at new areas of business, There are some areas which we've managed to enter into, but others that the bank is considering, and these will continue to add value to our ability to sustain profitability in the foreseeable future and to ensure that we can distribute dividends. Insofar as the share buyback, it's in operation, it's in its infancy. We are supporting the liquidity of the shares of the bank, and we intend continuing to do that, and I hope that other issuers in the market do that. I think they do extend value to their bondholders or their shareholders in doing that. And then when it comes to bonus share issues, it depends on our capital requirements and how much from our reserves we want to transfer into our share capital. Really and truly, bonus shares are a zero-sum game. You're taking reserves from reserves and putting them into share capital. But obviously, that benefits shareholders in terms of distributable profits going forward because of the larger shareholder base. But definitely our focus on the shareholders, which we have communicated to our shareholders in these last few AGMs, we are delivering them and materializing them, and we intend doing so going forward.
Thank you. Linking to technology and possibly putting in data as well, because someone mentioned data. How do we use it in our decision making? And maybe I can bring you in. And perhaps if we can link that question to decision making within the finance world, because that makes also an interesting topic, perhaps.
Yes, a very interesting question. Obviously, we've mentioned AI before, so AI without data is nothing. Obviously, we know that AI works with a lot of data, and data is one key component that the bank has. So our size and our customer base, this enables us to have a lot of data to process. So if one had to look at our balance sheet, I believe that two main components which are big assets for the bank, which do not feature in our balance sheet, are our human resources that my colleague Simon mentioned before. So the value of our human resources, which is not capitalized, but that is a big asset for the bank. But the second component, and this is gaining much more traction over time, is the data. So analyzing the data, analyzing trends is extremely important. Obviously, we do have data governance. We're strengthening a lot. We have our chief data officer here as well with us today. So we do have a lot. We're giving data and technology a lot of importance going forward, but focusing on the finance function. So one of my key objectives as a CFO is to ensure that we use the data to, rather than be looking historical, we'll look forward-looking. So we're redimensioning also how the finance function works within the institution. We're trying to be much more strategic, and we aim to be a business partner so ultimately finance is one of the bank's enablers. So as much as possible, we try to be also a business partner for retail, for commercial. Treasury is obviously under the CFO, but these business areas need to have the information handy. Apart from the business areas, obviously, then data and the importance of data also flows through to our executive management team. It flows through to our board because it's important for our decision making. So the information that we are processing flows through to our decision making bodies to take effective decisions when looking forward. So the historical is important to understand where we are, but that is of limited importance when also looking at the forecasting side. One example, which I'm quite proud of, is over the last couple of months, we've introduced what we call the balance sheet optimization model. So this practically brings within it various components, be it balance sheet components, P&L components, and capital components and liquidity, and forecast 3 years in the future. So through this, we are taking key decisions. So one key decision that we mentioned various times today is the issuance of the MREL bond. So when forecasting how our commercial business will grow, how our retail business will grow, we can forecast what our needs will be, And obviously, then we see what type of capital we will be issuing, how much liquidity we will have to invest in our investment portfolio. So all this is bringing together, obviously, a lot of insights, a lot of knowledge, which we transfer to our, as I said, decision-making bodies to also strategize and plan for the future.
Okay,
Carl,
thank you.
maybe an additional point relevant to our audience here is the use of data so far as customer insights are concerned. Because data is enabling us to, and we have a lot of data about our customers, is enabling us to understand our customers better and reduce the us concerning customers when the data can be consolidated. And this is an area that the bank is working on, because we should be in a position to identify those solutions that have a fit with our customers' requirements and approach our customers dynamically, as against customers knocking on our doors for solutions. So this is also another important use of data and data insights insofar as customer trends, customer patterns, customer product take-up, and what is relevant to our customers.
Okay. There's another aspect of data, if I can find the question that came in. And it says, what is being done to secure customer data? So I'm imagining this is more from a cybersecurity point of view. I don't know if anyone can pick on that.
Yes, I think when it comes to cybersecurity, I think when it comes to regulators, this is one of their biggest line items on their agenda. You know, to ensure that banks are very well protected, they have the required safeguards around data. And if you look at some of the hacks, some, you know, renowned companies that have been hacked, some of their data has entered into ransomware, so they've blocked their data, they could not operate, you know, and obviously the fraudsters were demanding ransom for the release of that data. So this is the threat of technology, unfortunately, and, you know, whereas against in the past, we used to hear of someone entering a branch wielding a pistol or a knife, you know, to rob. You don't hear these any longer today. So, you know, criminals have become increasingly sophisticated. They are not the rough guys around the block, but really they are sophisticated, academically qualified criminals that have come to master technology and use it for financial crime. So cybersecurity is high on our agenda as a bank because we are a systemic bank. And clearly we are shouldered with the responsibility to ensure operational resilience. And what does that mean? That our systems can operate day in, day out with the minimal disruptions possible. Just to give some context, apart from the customer base, we have some 8,000 point of sales in our retail outlets and supermarkets and, you know, the whole retail, or HoReCa, I should say, environment. So imagine if people go into shops and cannot use their cards, if they are abroad and cannot use their cards. Right? And this is the responsibility that this bank is shouldered with, and this is the significant investment that the bank is extending to our IT architecture.
And this also, if I may link into what you mentioned before, because obviously you have a vested interest from a compliance point of view that our data is secure, that we have the cybersecurity systems in place. So I guess that is high on your agenda too, no?
Yes, in fact, all this that the CEO has just mentioned is regulated. So there are different regulations ensuring that the bank operates within certain parameters, that there is strong framework in place, IT framework in place, and that the bank is secure enough to protect its data and ensure business continuity at all times. And there are various regulations that the bank is obliged to implement and follow, which we do. When it comes to personal data, because we mentioned data as well, there are data protection requirements and the safeguards that the bank is obliged to implement to ensure that the personal data of our clients is secure and to ensure that there are controls in place. The bank, within the definition of the data protection regulation, is a controller of personal data, and there are various obligations that come with that, including ensuring that there are controls and processes and systems in place to protect that data and for that data to be used for correct purposes. So apart from regulation that guides the bank in its provision of services, lending, investments, insurance, etc., there are a lot of regulation that perhaps our clients are not aware of and are not visible to the general public. However, that the bank is fully committed and very actively implementing to ensure that the whole infrastructure is safe and secure.
Thank you. Also, we're aware of time because we'll keep on chatting and we'll keep on answering. Perhaps one thing I'd just like to bring in, because it was interesting yesterday. Yesterday we were in Gozo and we had a similar event we did, like this one in Gozo. And one of the things we mentioned, and we linked it to a financial well-being center that we have in Sannat and Gozo. What is financial well-being? And maybe that is an interesting point for our audience, perhaps linking into the financial well-being center we have in Sannat, but also we know we have also another one in Malta, and perhaps we can, close it off with what is financial well-being to customers, and how do we help customers in their financial well-being?
Thank you, Carl. Again, a very interesting topic that is close at heart to us within the personal and wealth pillar. Financial well-being maybe can consider it as a buzzword, but we look beyond the term, and this is something that we're coming across in all evolved and developed societies. And if you had to look at it from the core value, it is working to have a better life and not just working to have a life. So I think it's something that all of us in this room aspire to, and I think it is increasingly coming to the core of every financial institution across the globe in aspiring to excel and be better at it as we progress through our development and evolution. And here what we at Bank of Valletta are doing is looking at what we call the customer life cycle. So this starts from when people are born, when babies are born, so we start to help the parents, because at that age obviously we cannot transact with babies, to strive for a better future, to start preparing for the education of the child, for the well-being. Kenneth also mentioned our foray in general insurance, which again is enabling us to service better the need as the customer moves through his life, which we call the life cycle. Then we progress, obviously, and there is the element where we live the life with students, which I am proud to say that I was involved in my early life at the bank, and we worked a lot, Carl and myself, on this. This is facilitating the life of the student, where maybe finances are not really all that forthcoming, where we are now playing a very active part in helping also, as you all know, we have a very beneficial education system, but we as a bank would like to help and are helping a lot of students that also seek studying abroad, which for those of you parents who have children know that it's not by financial means an easy task. Again, the financial well-being, we can stay here and discuss for a long period. A very topical and element which is close at heart, which we are facilitating through also expanding or the knowledge of the community in general through a number of lectures and programs that we are conducting with respect to financial literacy. Probably the most topical at the moment is pensions, and less topical, health insurance. Let me start from the second point, and I will be very concise on your tip that we need to finish off soon, Carl. Health. Society evolves, our need evolves. Again, we have a generous health system in Malta, which is for free for everybody. But again, as we grow older and older and older and older and older, I mean, this morning we were hearing the chairman highlighting that the average age in Malta is now around 80 years, and in 50 years' time this could go up to 87 years. We will need help with our health. And this is where we are, again, this is why we introduced, or will be introducing by the end of year, general insurance with respect now to health, which will help us to assist clients to plan for the future and their current needs when it comes to taking private healthcare, which may need or may fit in our changing lifestyle. Last point on the pensions, which is again something we hold very close at heart, and which I think all of us need to give, possibly even the younger generation, those of us that have less grey hair than me or white, is planning for the future. Maybe the term pension is a bit heavy and it's associated with old age, but this is all about well-being. How will I be in 20, in 30 years' time? Not I, in 30 years' time, probably I won't be here. But how will people like our CFO, Kevin, will be in 20 and in 30 years yet to sustain the current standard of living? And this is quite a challenge for everyone, because when you're young and today's ways and means lead us to spend and enjoy ourselves, but we also need to plan. And this is where our well-being centers, which so far are two, but we plan to expand in the next 3 years more. And this is where our physical distribution channels will be orienting themselves in helping the clients in this added value services. And I also link this with the question about shareholders. We're here to deliver value to the clients, which ultimately will be transposed via profits to our shareholders.
Thank you very much. Thank you all for your insights. I really enjoyed this conversation. And I'd like to invite our CEO for the last few comments, and we can close the session. Thank you.
Just some closing remarks. First of all, again, I wish to thank you for finding time to join us. I hope this has given you some deeper insights on the bank, its current operations, and where we plan to go going forward. We remain firmly anchored around our strategic plan. We're in the second year now. At the end of the second year, we have our last year next year. And we started preparing as well for 27, 29. In the future, looks bright, and we want to ensure that as a bank, we remain future-focused, ensuring that we are meeting the expectations of the various stakeholders of this organization. So thank you once again, and wishing you all a lovely evening. Thank you.
Thank you, thank you. Thank you all. Thank you for being with us. Now I invite you all to join us for some refreshments. There are some people from the bank as well. If you'd like to speak to us, we're always here. So thanks again for your presence, those who are watching us streamed, and for all your questions. Thank you very much. Thank you.
Prosit.